Gang, we in the building. The Swag Academy YouTube channel. Swaggy Vlog current status. I'm bringing you guys another video for my YouTube channel that's not Secure the Swag or at Swaggy C, which I haven't started yet, but I will be starting sometime this week, right, Austin? I believe so. Sometime this week, yeah. This is just a regular, video like I used to do on the market. This video is about candlesticks, the importance of candlesticks, why people mess up when they look at candlesticks. They think it's a shooting star, but it's really something else, or a Maribozu, or they don't even know what dojis are for. They automatically think if they see a doji, it should be a reversal, and it's like, nah. So I'm here to teach you guys, give you some free game on the importance of candlesticks. But before I go any further, make sure you head below and subscribe down low. I started this channel, got serious about it in February, and I've gotten over 51,000 subscribers, right, Austin? 51, 52?
We had 53.
53. We had 50. Shout out to y'all, man. We had 53,000 subscribers in 4 months, man. I'm very, very excited about that. So I'm gonna keep, dumping out content. Subscribe below, like I said, to keep running it up so you guys can be notified when a video like this drops. And tomorrow, Secure the Swag episode 3 drops. You don't want to miss it. There's a lot of crazy stuff been going on in the last week. Very, very stressful, and it all got captured, on Secure the Swag. So you guys will be very, very interested in the episode tomorrow. Let's get right into the candlestick video. One more time, make sure you subscribe below so you can be notified when a video like this drops. And make sure you comment below on how this video has helped you with your trading and what videos you'd like to see next. Because remember, we're on a schedule. Once a week, Secure the Swag will drop. Once a week, Act Swaggy C will drop when we, officially start that up. And once a week, a regular video on me trading the market and actually teaching you guys on how it all goes together will be dropping. So 3 videos a week. I'm trying to get it to 4, but as of right now, we're doing 3 videos a week. And last but not least, if you really like the content that I'm having here and you want to skip all of this YouTube information, you want to learn directly from me and, on a course level, structural base, A to Z, everything that I have in my mental brain, go to www.swagacademy.com. That is where my course is right now. I have 2 different tiers. You can pick whichever one you want, and it is loaded with information. It's probably like 120 pieces of content. There's group chats, there's webinars, there's daily breakdowns, there's a timeline where everybody in the community can talk, and it's like a Facebook news feed, but it's built in on the website. So www.swagacademy.com. You get all the information, but without further ado, let's get right into the video. Transition smoothly and get right onto here and explain to you guys the importance of closing candlesticks. So not just candlesticks. So we're not going to talk about what's a shooting star and what's a doji and what's a Maribozu and an evening star. No, we're going to talk about closing, like the actual times it closes on. If it closed on a key level, if it closed on the middle of nowhere, because you can know all the patterns in the world. If you don't know what time the pair closed at or what time it created that doji and how big the wick is in comparison to the body or vice versa, you don't really know too much about candlesticks, and that's a real important topic. So just a quick example over here. Let's just go to GBP USD. Like I'm on, I only trade these 3 pairs anyway: Gold, GU, and GA. And the first thing you want to do if you're not an expert trader is make sure your support and resistance is plotted on here. You don't see too much on my charts. Like you can go to GA. There's only I'm on a 1 hour, but daily only 2 markings on my chart. I'm on Gold. There's only, 1, 2, about 3 markings on my chart. I don't really have too much because once you become more advanced trader, you kind of, just use your eyes. But the first thing I would do is make sure my key levels are on here, like here, here. I make sure all my key levels are all in place, all in sync, all good. Now, let's say over here, because I know one of my key levels would be 124 flat, just flat right here. Right here, from here to here. Like I know this would be one of my key levels off the gate right here. And continuing this wick, obviously. Another one would be 125, obviously, which would be somewhere right here because of, like I said, I know this is why it's so important to master one pair and just trade one pair, because I know my key levels by heart. So I have my key levels on just in case, but I can delete it right now. But that's the first thing you want to do, just so you know exactly where it's plotting on. Because, for example, you can see this candle right here. Look at this right here. Boom. And you would have sold it, because obviously on a 15-minute time frame, that may look crazy. Sold it, and then price pushes back up another 30 to 40, 50 pips, and now you're negative. And now if you have a small account, you just lost that trade because you closed out, and then it still went down and did exactly what you predicted to do. Or even over here, for example, like this, obviously you have a key level somewhere in the middle. I obviously have here to here, and then I always have like a mid level as well. If you don't know how I trade my support and resistance levels, go back and watch some of my videos. But I would have one at 124,500, just a mid-level between here and here. And you see, obviously, price got here, wicked above it, still closed below, wicked on right on top of it, wicked above, closed below. So this is obviously a mid-level. And the reason why, like I said, it's so important to have these support and resistance level zones, because you could have easily bought this pair and think it's going to go all the way back up to 125, not knowing it's just halting and retesting this mid-level before pushing and crashing back down. That is so important. And then with the actual candlesticks, you got to look at this. The closure of the candlesticks. This is a closure of a 1 hour time frame. But look at this. Let me try to highlight this just for right here, for example. Let's go down to a 15-minute time frame or even a 5-minute time frame. You would have seen this candlestick right here. Look at this. Push up, retested the moving average, push all the way up. You see this big ass candle right here, and I do a bar replay. Let's take this off. You see this. What are you gonna do? You're gonna buy, right? It's instinctive to just, let me just buy, get a right here, long position, closure of this candlestick right here, take profit up here, stop loss, right below the, last wick or whatever the case may be. You click play, and then what happens? You're obviously immediately negative. You really never go back to, positive. And then eventually, if I can speed this up a little bit, you end up losing that, trade, and you're wondering what you did to go wrong. What you did was you didn't wait for that hourly closure. The hour is so important. Look at this. You have wick. You have 4 wicks in a row to 124,500. And if you take this one off, you have 3 basically, which is telling you, hey, price is not about to head up, it's going back down. And this is why it's so, hard for some traders to put it all together, because you have to know everything about trading. When I mean everything, I mean like you got to know where your key levels are. You got to know what time frame you're trading on. You got to know what pair you're trading, because it depends if you're trading GBP USD and it's an Asian session that's consolidating, or is it consolidating because London just opened, or because London is closing and people are, getting off of work in London, but people are coming to work in New York. Like, what time is it? And then also you got to figure out, what trend is the market in? The market is in a downtrend. What makes you think this is just going to reverse? Like, the market just pushed up and reverse back down. What makes you think it's just gonna, reverse and push back up? You got to go with the actual overall trend. And the market never, like the moving average, another one you got to know, never crossed back over. Blue never crossed, above the red on the 1 hour time frame. If I go to the 4 hour, I don't have it here. I know for damn sure it didn't cross over on the 4 hour, because obviously it takes a little bit longer and it lags on the 4 hour in comparison to the lower time frames. But we go back to the 1 hour time frame, and I don't know why my computer is acting slow right now or being stupid. Get off the bar replay first of all, and then go back to, okay, cool, perfect, 1 hour. All right, so look at this. You have to wait for the closure of the candlestick. If you would have gotten a 15-minute time frame, you would have lost. Now the 1 hour time frame, you see price, the body here does not override the wick. There's more wick than body here. Whenever you see a situation where there's way more wick than body, be very careful, because only one of two things. Either it's going to be a reversal, or it's just a plain old doji and price is consolidating. You see price consolidate. The moving average is together, which shows you that price is not in a clear trend. Then we get a big push down. But then again, you get a bunch of wicks and then price pushes down. But this is where you got to be careful. We need a close. Like, this is way more wick. And I want to cross over because you can't see it. This is way more wick right here than the body. The body is probably 10% of the overall wick. That's not what we want. So we can back out clear as day and see price is just simply consolidating. Like, we can, draw a consolidation around, top to bottom basically. And basically see this whole thing is consolidation. And all we're waiting on is a break of consolidation. Price is just in the middle. The moving average, middle. And then finally, we get some type of break. This is not a break. Understand this. If you're a new trader, if price wicks below a support, but it does not close below that support still held firm, period, end of story. So you need to close. So right here, we get a closure. Do we trade this? No, we wait for a confirmation, because the moving average crossed over just a little bit above. And this is one of the, the tricks I learned from my mentor a while ago. You have, 3 different scenarios. You have price breaks out the same time, the moving averages cross over, or price breaks out and then a little bit later the moving averages cross over after that, Or the moving averages cross over right before, which it did right here, and then price breaks out, which is, a more aggressive style approach. So the moving average crossed over inside consolidation, which it never did over here. We're still together. And then we got some clear separation, which is what we're looking for, and an actual retest off of it. So understand, a moving average is always a moving support or a moving resistance, or even a moving trend line for that matter. It moves with it. So over here, price is not, rejecting the moving average. It's going above, it's going below. It does not respect it. Right here, this is where, like I said, you got to pay attention to the structure, price action. Go back and watch my price action videos, or just skip all of that. Go to my, my academy at the swagacademy.com and, sign up for the course and learn all the videos, because it's like, these are little, ideas and tricks that you got to understand that, hey, price is not respecting this moving average. It's still consolidating. What do you get right here? Oh, price respects it. Bounces off the moving average. 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 Oh, clearly this is going down because it's respecting it as a moving resistance. And the same goes on the opposite way. So right now, clearly we get a break. We get a retest of the moving average, like the same thing as a trend line. When you break a trend line and retest it, or support or resistance, we break the consolidation, we retest the box, and we come all the way down. Now your next take profit should be that 123.00 level if you don't partially take profit at 123.500. Now, price does not reach this level. What do you do when price does not reach your take profit? One of two things. My first take profit, like I said, I trade in levels. I altered a little bit, but I trade in levels. So 123 would be my take profit from this, and price didn't reach it. I do one of two things. I do one, either I move my stop loss to break even and then I let it hit it eventually, because obviously if you see price goes down, doesn't hit it, comes up, and then eventually hits it eventually. But that's more of a relaxed approach, and most traders aren't like that. Most traders will see this and immediately get out. Guess what? That is okay too. I want you to understand, my boy Shy told me when I first started trading in 2015, like, you can never get mad at taking profit, period. So if your take profit is 123 and you see this, kind of a reversal right here and then another confirmation right here, or even a little bit of it, and it goes 40 pips up, if you want to take profit right here, guess what? Feel free to take profit, even though we know this is just retracing. And the minute you see, clear confirmation, get back in. So for example, why do we know it's just retracing? Because first of all, price moves in three levels. Leg number one, which is level number one, consolidation. Leg number two, retracement, consolidation. Leg number three, retracement, consolidation. And now price can easily just, bolter back up, but I don't think it's going to bolter back up. I think we may get a fourth leg with GBP USD, because, and this is turning into a candlestick / market structure video, because if price is reversing, it would have gave us, a higher low and higher high. Price is doing exactly what it's doing when it's just, counter trend trading, which on a counter trend, if you don't know what it is, go watch, like I said, go watch my other videos, look at my academy. Just right here, just a counter trend line where price is just, abiding by, just going above it before it finally makes a leg. If price wants to reverse, what it will do is this. Get a brush tool. It will, reverse, boom, 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 and start creating, higher highs and higher lows. Price is not doing that. So I would not be surprised if GBP USD tanks some more. That is actually my prediction for this upcoming week, that we can actually see GBP USD push even further down below this level. But back to the original point of the video in terms of just, looking at candlesticks. If you want to get out right here, that is completely fine. For those who did get out right here, what you would do is just wait for price to retrace, because price is just retracing. Like, all it's doing when it's doing like this, it's just retracing because price has to, continue the structure of the downtrend. Nothing here told me that price was going to break this downtrend. Nothing. And this is just a 1 hour. Go to the 4 hour and just look at it like together. The moving averages is still you gotta understand, I'm on a 1 hour, which is where I don't even get the confirmations. 1 hour is more for my entries, same as the 15-minute. The 4 hours where I look at pure structure. And look at structure. Nothing here is telling us that price is going up. Absolutely nothing. Even here, a retest of this resistance of the moving average and push back down. So you got to understand structure as well as the candlesticks and see how they're closing. This is a shooting star. You see a shooting star just like this, close just like this, and it bounced off of a moving average resistance. You better sell. Like, I don't care where it's at, sell even further than 123 and go to 122. Like, go to the next level, because this is such a strong candlestick. And guess what? It closed. But not only did it closed on a 4 hour candlestick. You got to understand that. Understand this. The higher the time frame the candlestick closes on, the more aggressive you should be in your trading, but also the more confirmation it gives you that it's clearly going to do that, like more of a signal. Like, look at this. Like, we get this, a bunch of dojis on a 4 hour time frame. clearly it's gonna reverse and push all the way down. Even over here, consolidation, consolidation. We didn't get a close, no close, boom, push through, push through. You can easily get in right here, stop loss above here, all the way down. Or even if you would have gotten right here because you saw how it broke on a 1 hour and how that 4 hour piece got broken up into a couple of 1 hour pieces, easily get in right here, stop loss above here, and guess what? You're never negative, and it pushes down, retraces, and comes back down. If you got out, guess what? Price just comes up here. And what you're waiting on is a break of structure, but also not only just a break of structure, these candlestick closes, and look at what it actually does. We get a bunch of dojis. We got 1, 2, 3, 4, 5, 6, basically 7. I wouldn't count this as a doji, but 7 dojis out of the last 13, 14 candles. So 7 hours out of the last 14 hours, half of the day, or half of the half day, I guess, I don't even know I want to explain it, has been full of indecision. That is telling us price wants to, reject and push back down. We know price is not going to come all the way back up here and come to this consolidation level. We know that. Why do we know that? Because then it will be considered, okay, some type of break of structure. Price is no longer making lower highs and lower lows. Price is now back in the balance and in the pool of liquidity that it was over here a few days ago. So what we do know is price is going to retest something. What does it retest to a T? It retests this area where price and the broker wicked the market all the way back down here, stopped a bunch of people out, you know what I mean, who were selling, and then brought the price way back up. And now everybody who was selling is now losing money, obviously. And guess where it brought it to? Like, you got to understand not only just the fundamental announcements, but also understand where these brokers are pushing price to. So if the broker pushes price to here, you better bet that price is going to come back. Like, this is some type of level. Price, like, the broker didn't bring it to that level for no reason. So if you bring this down a little bit, or not even just a little bit, like, take the consolidation out of it. Let me just clear my chart for a second so we can focus on the lower end of the screen. I'm getting real deep with this video too. Lower end of the screen. We can see clear as day. Rectangle from the top where we have it to right here. Look at this. This is where it stopped at, and to a T, price came right here. Again, this was the break of the consolidation range that we had up here. This is the break. So where does price retest? The break. And then what does it do? Pushes all the way back down. Now, if you were to enter right here, and why would you enter? Obviously, you would enter because, one, you see a retest right here. 2, you see this little. It's not even a evening star, but it's called a pin bar formation. Top, bottom, and if you know what a pin bar formation is, like I said, go look at my academy. I kind of explain it in depth. But look at this. 1, 2, 3. The third candle breaks out, and it breaks below the moving average. Red crosses, above the blue. This is one of those situations where it did it at the exact same time. Get in, enter. And then you can also use this as well. Fibonacci, top right here to bottom. And the bottom will be right here, obviously. So if I did bar replay this, obviously, let's look over here. This will be the bottom, top, bottom, A, B, C. And this is a 61.8 retracement to the T. Remember, Fibonacci does, one of 4 things. It moves in one of these 4 levels. Let me make this type of a color. Let's make this red. It would reverse off of one of these levels. You got to be mindful on where the levels is. And this is why I don't really have too much, clutter on my charts. I try to keep it clear so my mind can look at it, in its purest form. You can look at it clear as day. I know my levels. I may have one level to remind me of 124, which is clear as day. But other than that, let me make that back to my actual great daily level. Cool. Other than that, you see price 168, and then you obviously click play. Once you see price make this, obviously, and it closes, obviously, we need to close, and obviously this is the closure. Once you see that closure, not only is it a bearish engulfing, but it's a bounce and a rejection off the 61.8. Price will not make this candle break out of this, pin bar formation and this box, close how it closed just now, and then be like, oh, I'm sorry, psych, let me push all the way back up. It's not going to do that. That would be a break of structure. And the market will not do that. This is why, you got to figure out exactly where the market is going. You click play, and price is exactly where you want it to do. You get out at the 27 extension. So same thing with my other pair, GA. Let me look at GA for a second. Back to my 4 hour. I'll even give you analysis on GA, for example. GA is dropping. So the daily yesterday actually closed below 180, which is kind of, great for us because, like I said, we're looking at daily closures and 4 hour closures, even 1 hour closures, but we're looking at closures, not, a jolt movement or anything. We're looking at actual closures. So we got a, shooting star bounce off of the resistance, which is a moving average, another shooting star which bounced off the actual resistance at 1.80, the key level. And then now we're having some type of retracement. Long story short, I am still very bearish on GA. I wouldn't be surprised if price came back up and retested this level. We'd have an easy Fibonacci from A, B, 50 level would be this little key level right here, and then drop back down. But I do think we can see GA push the levels of 177,500, which is a 61.8 level. I'm skipping the 27 extension because I just know my pairs in general. I know how fast I like to move. If it does come here and gives me some type of doji and it hesitates, then yeah, I will get out. Like always adjust your pairs when you work around it. But at the end of the day, I'm giving y'all so much free content right now. Oh my gosh. I have it going to 61.8, obviously, because of the daily closures and just how I know my key levels for GAR. This is why you got to stick to one or two pairs, and just master them. But yeah, I hope this video, helped you guys out a lot. Let me actually take this off, remove the drawing tools. And obviously, you see our price got to the 27 extension, close. And obviously, like I said, remember what I said, earlier. Look how it closes. This comes down. Wick all the way down here, close a little bit up here. Now this candle's a little bit smaller, pushes up a little bit. That tells you 27 is done, hit, boom, got the trade. It's not going to come back down to 61.8 until later. Now price is in the process of retracing and creating counter trend lines. So like I said, I hope this video helped you guys. Start focusing on the closure of candlesticks and not so much these impulse moves. I will be making videos like this every Monday, of course, just to help you guys out and give you guys some kind of insight to these actual pairs and what they're doing. With the Swag Academy right now, we are also, revamping the entire site and creating so much content for you guys. So with the Swag Academy, I basically made all those videos in December and January, and it is now July. So I'm taking all the videos off. But right now, like if you sign up for the Academy right now, even next week, it'll still be there. Cool. Learn the content, connect with the members, use the social timeline, the newsfeed, get access to the webinars and the daily breakdowns. Cool. But there will be a day where, the old content gets, kind of removed and all the new content. And this is not new content. This is going to go on YouTube. But content like this, where it's all 20 minutes, 30 minutes, 25 minutes, 15 minutes, 10 minutes, 20 minutes, where it's like, you see how much detail I gave to you guys right now for free? Imagine the detail I'm going to go in on my academy, especially when these new videos drop. So if you're interested in my academy, go to www.theswaggyacademy.com and watch the videos I have up there right now, which is still very informative. I have over 120 pieces of content on there, split between written and video, but most of it being video. But at the end of the day, the new content should be up there sometime, July 25th, July 30th. And understand this, if you sign up for my academy and the new content comes on there, there's no fee. Like my program is a one-time payment. So if you pay now and then, the new content comes up later, guess what? You get access to that too. If you pay later, you'll get access to whatever you get. So it's like, you know what I mean? I'm just doing a lot of revamp with the Swag Academy. I'll go to it right now, swagacademy.com. There's a lot of content on there. Just in general, you can go here to members content, the courses, and how we have it here. And, over 120 pieces of content here, which is amazing. But like I said, I'm dropping videos like this that I just did, like times 10, dropping like 110 new videos coming up in the next couple of weeks. I'm doing like 5-10 videos a day, and I had some time to make a YouTube video for you guys who just can't afford my academy right now, even though it's only $300. Some people are really struggling, just want to learn for free. And if you do that, like I said, every Monday I come out with a video. Understand it's surface level information, but if you can study my YouTube and you're finding it of value, definitely keep watching my YouTube. If you want to dive a little bit deeper, go to my academy at www.swagacademy.com. I'll holler at you guys, and I appreciate you guys for watching the video.